Hello, good evening, ladies and gentlemen, traders and investors. This is Alex from MarketWise Asia. Thank you for watching this live stream both on YouTube and also on Facebook as well. So today's date is 28th of April 2025 at 10:30 p.m. We are approaching another end of the month already. So next month is going to be the May soon already, okay? So if you can hear me loud and clear, please say a hi to me in the comments or whatever it is, okay? In the Facebook chat, okay? Or in the Facebook comments or also in the YouTube chat as well. So let me just take a look at the comments first, okay? Let me take a look at comments. I know there were already a few who say a hi to me. Dave, Will, Chia, Lyding, Kelvin, Hadley, thank you so much, okay? So by the way, right, okay? Yeah, it has been a hectic weekend because last Saturday, okay, the Market Insights Conference were held at Suntec. Okay, it was a full house event. So in fact, the room can only take, I think, about 300 plus. I think in the end, there were about 400 plus people who actually came. Okay, it was really a full house. Some of you guys have to actually stand at the back because there weren't just enough seats. Okay, so we apologize, okay, if you have no seats. Okay, all right, but anyway, it was a very successful event. Okay, so all the speakers, I think they give out lots of insights, okay, and also the market outlook of the rest of the 2025 and what they think could happen in the coming years, not in the years, in the months ahead. Okay, Jean say, hi Alex, I was there and enjoy Shay's talk. Thank you so much. Okay, so yeah, just a quick show of hand here. Just type me if you were there. Okay, just type me if you were there. Okay, hello Paywan and Ling. Okay, Bernard. Okay, Wai Lam. All right. So I know there were some of you guys who were there and actually also chatted with me. So once again, thank you so much for those who were there and approached me and talked to me. Only a few lah, okay. Of course, you know, I will be busy because I was attending so-called, I'm the tech support lah, okay, at the site, okay. Make sure that everything works well, you know, all the presentation slides works well and everything works well lah, okay. Hello, Rutira. Okay, hello, Jason. Let me just kickstart this session right now. Okay, for those who just joined us, okay, or those who are new to MarketWise Asia, once again, thank you so much for watching this live stream. Let me just adjust the screen so that it looks bigger for you. All right, so this is the screen that you should be looking at right now. So as usual, a disclaimer first. Whatever I share today is just for education purpose, okay, not a recommendation to tell you what to buy or what to sell. So please do your own due diligence. All right, so for those who are new to MarketWise Asia, like I say, okay, especially after the event, after the Market Insights Conference, okay, typically every Monday evening, like today, 10:30 p.m., I will do my live stream, okay, on YouTube and also on Facebook as well. So for the other social media channel, okay, do follow us, okay, via this link over here, okay, by this link over there. Okay, so in case you don't know, this is the link where we have all the social media page, okay, the Facebook, Telegram channel, YouTube, TikTok, X, and our homepage, and also the on-demand webinar. So I would encourage you, okay, to subscribe and follow to all if you have all these social media channel, okay, and especially the Telegram where I will post the latest news, the price mover, and morning update, etc., to keep updated abreast of what's happening in the market. Okay, in case you know you're watching this on replay and you somehow cannot see the link on the comments and such, right? Okay, I can show you this link right now over here. Okay, yeah, so this was done. Okay, all right, so you can see, follow all the social media channel. Okay, you can scan the QR code over here, or you can head over to this Linktree link which I just posted in the comments. So all the social media channel plus the access, the on-demand webinar, unlock the secret patterns hidden in the market. Okay, all right. So without much further ado, okay, let's kickstart this session right now. So for this coming week, okay, all right. So before I go into this coming week, right, not only we have this economic data, okay, in fact, heading into the next week, okay, our election, okay, Singapore election is coming up on the 3rd of May. I believe most of you guys here who watch I think at least 60 to 70% are Singaporean, I believe so. So no, we are heading there. 3rd of May is actually on a Saturday. Is it Saturday? Try not. Yes, so this coming Saturday, we are heading for the election. Okay, just in case you know where is my GRC. Okay, I am Jalan Besar GRC lah. Okay, so all the excitement, okay, is in the east. Okay, east side is the best side. Okay, west side central, okay, not so much of action over there lah. Okay, anyway, all right, so this is not going to be a political broadcast. Okay, I'll just head back to my thing over there. Okay, so for this coming week, the economic data for this week, okay, in case you want to know, I will post the link in the comments over there. So for this week, in fact, there are quite a number of so-called data that is coming out. Okay, so starting from Tuesday, tomorrow, there's this jobs opening. Then on Wednesday, there's this non-farm change. Okay, non-farm employment change. Then these are advanced GDP. Okay, and then also the core PCE price index, more or less the inflation data also lah. Okay, all right. So on Thursday, then this will be the let me zoom in. Okay, these are the unemployment claim, and then the manufacturing PMI, and then on Friday, there's unemployment rate. Okay, all right. So you can see that back to back, Tuesday, Wednesday, Thursday, Friday, there will be news releases, fundamental data releases. Okay, all this. Okay, again, we won't know which is going to move the market. Okay, the market, not the market, the media will find a reason. Okay, to tell you what has moved the market. They need to find a reason. So for example, okay, after the next few days, okay, next Wednesday, the market has not much reaction. Okay, they say that, okay, nothing. And then on Thursday, suddenly the market dropped. They tell you, oh, because of the unemployment claim, the market dropped. Because of the PMI numbers, not as good, and the numbers drop. Okay, if Wednesday, Thursday, the market not much action, and then on Friday, suddenly the market drop. Okay, they say, oh, because of the non-farm employment change, because of the unemployment rate. So we won't know, okay, just all this data, just to let you know that all this could be market moving. Okay, all right. So yeah, so before I head into the technical aspect of the week over there, so I'll go through some of the so-called macro side of things over there, so to let you know what has happened within the past 1 or 2 weeks or so, and some of the fundamental data as well. So let's also head back to the tariff. Okay, as of now, tariff news is getting a bit so-called not so hot right now lah. But okay, just to give you a recap, okay, what has happened since the start of April, so until now, okay, what has happened. Okay, so yeah, so I believe that you guys know that, okay, since this early April, because of this, this Trump, okay, anyhow say anything, okay, just talk about this tariff of 10%, 20%, whatever it is, okay, at different countries. Okay, the 2nd April announcement, historically high tariff, so of course raised fears, okay, that they will persist. Okay, so of course, that take a look at the S&P cash index over there. Okay, so this is the date where the market start to drop. Okay, this is the 2nd of April. Okay, market start to drop. Okay, this is S&P cash index. All right, and then after that, the first positive step. Okay, Trump announced that there will be a 90-day pause. Okay, to help ease some of the immediate tariff, but average tariff could still rise from 2% to over, I think, average about 10%. Okay, all right, okay, and then, okay, the media report saying that, okay, the US admin considering cutting tariff on and off. They always say on and off, we will still continue, then market rise. After they say, we won't be cutting everything. There will still be some tariff on the Chinese import as well. Okay, and then the Chinese response is that it's weighing some, attempting some US goods from tariff as caused pressure mount. So all in all, the US actually keep saying some news in the media, say, oh, I actually talked to China. Okay, China give us a call that, we are working on a good relationship, that kind of things. Okay, then after that, China rebutted that, hey, no, I didn't receive a call from Trump or from the US. Okay, so don't talk nonsense. All this blabbering, okay, is like, like what Alvin said, in the conference. He said that, it's just like two children, arguing with each other, okay, like small kids lah. Okay, So Sun say it's like biggest liar lah. So I don't know who is talking the real thing now. But I believe China lah. Okay, I believe China. Okay, if they say that no, Trump didn't call me, I think that they mean the real thing. Trump really didn't call them. Okay, no point for them to talk lies lah. Okay, all right. So I think I've repeated a lot of times, not a lot of times, at least I think since the start of April, I said that I think that US need China more than China needs US lah. At least based on what is the stand and what is the reaction from China from start of April until now. It's like telling China, it's like telling the US, you want to increase 10%, 20%, 200%, up to you lah. I don't care. It's like giving them the middle finger lah. Fuck you, understand? Okay, I don't care what you do. That kind of thing. Okay, doesn't care lah. Okay, of course, then the US realized that hey, my tactic is not working on China. They are not scared at all. So no choice, US have to scale down. Okay, yeah, China said, said China call, but China said, like I said already, I think that China said everything now. Okay, so the tactic is not working on you. It's not working on the China. So I think US has to scale back on some of the things they say lah. Else it's not going to work out fine eventually on all these tariff things. Okay, because US still import a lot of things from the China side as well. Okay, of course, there are some sectors. There are some sectors that's exempted. Okay, from the tariff, like for example, semicon. I think of some of the high tech thing and such is exempted. But I'm not sure about you. I think the past 1 or 2 days, right, there were some news that saying that this Apple is going to trying to move away their assembly from China, okay, to India. So they basically want to move away their factory from China, okay, and plant it in India, okay, so to rely less on India. Okay, I mean that eventually they might so-called diversify into other country like India and such, but it is quite difficult to diversify everything, okay, from 100% from China right now. First of all, okay, the Chinese, okay, the factory production and manufacturing is very skillful. I don't think the rest of the country or even the India can also compete with China based on their skills yet. Not as of now, not yet, okay? And based on the infrastructure, okay, the efficiency also not as good as China for now. So it will take some time, okay? Who knows, by the time it is done, it will take don't know how many years already, okay? So not so easy. I feel it's not so easy to shift the production from China to India. Okay, of course, there were some talks that, US is making progress with South Korea and talks with India. So I won't go through this. Okay, this is just small news. Okay, but okay, the key thing is, okay, uncertainty still lingers. So there's still uncertainty within this tariff thing. Okay, so yeah, but I think like I said during the last week, okay, live stream, right? Okay, these tariff things, okay, is a bit sian already, right? Okay, every time talk about tariff until that recently, not so much news about tariff. Okay, do you realize that or not? Or do you feel that way? If you feel that way, okay, just type yes in the comments or just type letter Y in the comments. So do engage with me, okay? Liking, commenting, or even sharing this, okay, will help YouTube and also Facebook algo, okay, that you will see more of our content in the future. So like, what I think, okay, likely past, okay, volatility, it is likely peak already. So again, of course, every now and then, occasionally, Trump will actually, say this and that, okay, will cause some volatility in the market. But I think that the tariff impact, it is overall coming down, it's coming down, okay, not so much really. So if you take a look at this chart, right, volatility eases as trade tensions cool. Okay, this is taken from some data site. Okay, so let me try to zoom in here. Okay, so basically it is showing you the brown color, the golden color, it is the VIX, this volatility index, And on the blue color, it is, I think this is the proprietary, some of the Bloomberg Trade Policy Uncertainty Index. Okay, you can see that it is actually pretty correlated. Okay, when the Liberation Day, the tariff day, okay, announced on the 2nd of April. Okay, after that, both the VIX and this Bloomberg Trade Policy Index just shot up through the roof over there. Okay, after that, it said that it is going to pause. Okay, the volatility actually came down. Okay, so right now it is still coming down. If I'm not mistaken, the VIX right now, is it coming down? Yeah, about 24. I can see that the VIX is actually coming down also at 24. Okay, it's at 24. Okay, all right. Then of course, okay, last week, okay, there also news that Trump wanted to fire Jerome Powell, okay, after earlier frustration about interest rate because, okay, I think last week I say, okay, Jerome Powell just, don't want to reduce the interest rate, but so-called the good things is, okay, Fed and the government, like I said already, is actually independent. So doesn't mean that President Trump want to fire Fed or the Jerome Powell, he can do so. Okay, President Trump said he has no intention of firing. Okay, even if he has the intention of firing, okay, he can't do that because Fed is not the government, government is not the Fed. Okay, the Fed, not the Fed. Trump has no executive power, okay, to fire Trump as well. Okay, and of course, previously there was some impact on the Treasury yields over there. Okay, previously there was some tensions, but right now the 10-year yield, okay, has returned to the middle of about 4 to 4.5% range. So if you take a look at the 10-year yield, which is essentially the bonds market, okay, the 10-year yield over there, okay, at that point in time, okay, the yield actually shot up from 3.9% to about 4.6% within just a few days of time. Okay, so in fact, previously I said that there was something broken with the bonds market, and the US government won't allow the bonds market to fail. Okay, the equities market can fail, okay, but the bonds market cannot fail. So after that, you can see that after that, that's when Trump actually announced that there will be a 90-day pause, okay, in the tariff. That's when the 10-year yield actually drop, okay, back to somewhere around at least the normal range prior to the March area. So it is within this 4.2 to 4.3% right now, which is also the relationship is inverse with bonds. So if bond price goes up, yields go down. If yields go up, bond price goes down. So previously when the yields shot up, okay, the bonds price also go down. So it is actually inverse of the relationship. Okay, all right. So the so-called the base case scenario, okay. All right, so typically if the US going to impose a 10% universal tariff, okay, so like the higher rate on the sectors like semicon and all these pharma growth, like, could slow down, okay, to 1.5 to 1% growth lah. And of course, short term wise, okay, the inflation may also go a little bit higher, okay. So core inflation may peak around 3 to 4%. So again, these are just the projected short term now, okay, it won't be long term, okay. So right, and the Fed current stand is that they most likely also won't reduce the interest rate so fast. So it's expected to stay in a wait and see mode during its May 7 meeting. The next meeting is going to be next month, early May. So it's going to be, I think, just 2 weeks ahead. 2 weeks later. Okay, and there's a possible rate cut. Okay, so as of now, don't think there will be a rate cut. Okay, so the clearer signs, okay, will be later this year. So if you take a look at the chart here, okay, let me just post the link over here. Okay, so Fed will most likely cut interest rate this year. So basically right now it's 4.3%, May should stay at 4.3, okay. Second half of the year, maybe you'll come down, okay, eventually to December about 3.5%, okay. So that is the projector lah. So maybe about 2 to 3 cuts, okay, within this year. All right, so yeah, and within the S&P recovery, okay, since the so-called the tariff pause, all right, the S&P 500 has rallied 10% off the low, okay, but still remain 10% below its February high. So if you take a look at the S&P 500 over here, okay, this is the low over there. Okay, so right now, in fact, has up about 15% already, okay, up 15% already, okay, but it is still about, okay, 10% off the previous high, okay, the all-time high in February, okay. In fact, okay, just to repeat, okay, at the bottom, okay, when a lot of people were very scared, okay, some of you guys say that it's a dead cat bounce and such, okay, I know there were some people who actually sold, okay, so it from now until bottom, it has already about 15%, okay, all right, so next step requires more progress. So the extreme pessimism is kind of fading right now. So, but of course, further gains, okay, will depend likely on actual trade agreement, not just softer rhetoric kind of a statement. Okay, so again, like I mentioned, right, this so-called this sell-off is actually very event driven. So it is not due to a fundamental deterioration of the economy and such. So it is because of this news tariff thing that caused this sell-off. It is not a fundamental deterioration. So the economy, okay, as of now, okay, pending more data that's coming in the future of now. As of now, okay, the economy, it is still doing okay. It is still doing okay. All right. But again, okay, the volatility. So when we talk about volatility, okay, essentially we're talking about the VIX, okay, in layman terms, okay. Historically, after a big declines, volatility, okay, takes time to normalize, which means that if you take a look at the VIX, okay, so VIX over there, it is here. Okay, so you can see that the mean value of VIX, okay, is about 19 to 20. Okay, 19 to 20. So when it hit that time about intraday about 60, okay, it is more than the 3 standard deviation already. Typically, okay, it will take a few months, 2 to 3 months, okay, for the volatility, okay, to drop to a level, okay, to that kind of, below 19 level, okay, below 19. It'll take a few months now, okay, not immediately, okay. There could be still some spike there and then, okay, still some spike there and then, but it will take some time, okay, a few months to go below 19 or there about the mean value. So you can see previously in 2022, okay, when it spiked to 2 standard deviation, not immediately, okay, it will take some months, okay, for the level to drop to about mean 19 thereabout, okay. So previously also the same spike there, okay, it will take some time for the VIX, okay, to actually drop to the mean to about 19 to 20. Okay, understood this so far? If you understand, just type 19 in the comments. Okay, there's nothing magical about 19, okay? Just in case, why 19? It is just the mean value, okay, overall in the VIX, okay, since the data has started to appear in, I think, the 1990s or what, okay? It is just the average, the mean value of VIX, okay? All right. So by the way, okay, for those who just joined me, okay, do engage with me, do share this live stream to your friends or relative or whatever it is, okay? If you're watching this on YouTube, okay, do subscribe to our YouTube channel as well, and also give us a like also and follow as well. All right, so like I mentioned, okay, so you want to follow us on social media. So this is our social media channel over there. I'll post the link in the comments. So Facebook, Telegram, YouTube, TikTok. Oh, by the way, yeah, I forgot to mention TikTok. Okay, if you're watching on, as in if you have a TikTok account, okay, do follow me as well. So I'm gonna do a lot of this so-called infographic kind of content, which I can do. Okay, this is something that I can do. I think that is more consistent. I can see that explore the evolution of the top S&P company, rare earth, for example. I know that. Okay, so and one of the most popular content. I don't know how actually TikTok do the algorithm now. Okay, this one, okay, has 10.6K of it. This is one of the highest views so far. Okay, all right, with 180 likes. Okay, 48 comment and some of the share as well. Okay, all right. Okay, hi Alex. Okay, wants to say a nice door gift on a Saturday. Thanks. Okay, thank you so much. Okay, if you were there at the Market Insights conference, okay. All right. Hey, by the way, the tumbler or what do you know what they call it? The tumbler, the big tumbler. Okay, outside is selling quite expensive. This kind of stainless steel tumbler. So in fact, after that on Sunday, I went to Vivo. Kenangan Coffee. Selling similar to this kind of big tumbler, that kind of thing. Okay, now recently it's very popular lah. Okay, this kind of big tumbler selling about $40 plus. Okay, not cheap. Not cheap. Okay, anyway, yeah. Anyway, if you're watching this, you somehow can't find the link. Okay, you can head over to this link over there. Okay, or you can check over there lah. Where is it? Yeah, scan the QR code. Follow us on social media, okay, and access to our on-demand webinar, Unlock the Secret Patterns Hidden in the Market. So just want to give you a quick one over there. So this is the Unlock the Secret Pattern Hidden in the Market. Okay, you click on it, you'll be brought to a landing page, okay? All right, so you learn how to predict market move like a pro, okay? And how I do that, okay, using seasonal patterns, okay, harness seasonal patterns for profitable trade, how you can make confident decision with a data-driven insights, okay, how you can outsmart market condition with predictive strategies. So just enter your name, email, and mobile, and you are good to go. So this is an on-demand webinar. All right, so it's a lot of good information out there, how to use seasonal trends to, okay, so-called predict where the market is going, okay, in the coming months or so, especially now that the market, it is actually starting to recover. Okay, so you know how to use the seasonal pattern to get some of the profitable trades as well. All right, okay, how come I don't have? Because you are more than the 250 attendee already now. So we actually send out email and SMS that only the first 250 attendees will receive the goodie bags because we can't give everyone. Okay, all right. So Brownie says, sell in May. If you realize, okay, sell in May and go away, this adage is not so true recently already. In the recent years, okay, it is not sell in May and go away. In fact, May, it is not that weak. Okay. All right. For more information on the seasonal data, okay, you can actually opt into this landing page, okay, and take a look on demand webinar lah. Okay, so once again, I'll just show this screen over there. You can take a screenshot, okay, scan the QR code, or head over to this link over there. Okay, or I'll post this once again, this link over here. Okay, all right. So where did I cut off just now? All right, so yeah. Okay, personally, okay, I don't think there will be a V-shaped recovery, okay, which I think I mentioned for the past two live stream as well already, okay. So due to the lingering inflation and also the so-called the tariff thing, okay, a very fast recovery like 2020 COVID is unlikely, okay, all right, without a strong Fed or fiscal support. So do you realize that during the 2020 COVID sell-off, okay, the Fed actually took action very fast. Okay, you come in and stabilize the market, say that, okay, I will do our best, okay, our job, to stabilize the market, we inject this, inject that, okay, to make sure that, everything all works, okay. But this time round, due to the tariff things, okay, the Fed is giving the Trump a middle finger, say that, hey, no, I'm not going to do anything, okay, don't ask me to do anything, I'm not going to do anything. So without so-called the Fed injecting the money and a lot of these things, okay, the Fed is not going to do a lot of things. So it's not going to be a V-shaped recovery. But like I say, okay, unlike the previous like 2008 global financial crisis, okay, right now the economy, as of now, there's still no major cracks yet, okay. All right, no major imbalances, no debt services is healthy. Unemployment rate so far is low, and the wages have outpaced inflation, okay, for nearly 2 years. So all in all, it is telling you that, okay, the economy, it is still going good. So that's why the Fed, okay, it is not doing anything. Just stay put for now. Okay. All right. So right now it's in a rate cutting cycle. Okay. So even though it is not reducing rate right now, it is also not hiking now. Okay. So it reduces the risk of a deeper market decline. But all in all, okay, the market, okay, US might still stay range bound for now before recovering towards the early 2025 level, which is the February level which is talking about. Okay. All right. So year to date, okay, like you guys know, for the US side, year to date, what it is happening right now. Okay. Some visual chart to have a better understanding over there. Okay. So as of now, even though it has some recovery, the Magnificent 7 still dropped the most. Right now, it's still down all in all about 16%. Okay, Magnificent 7, MA7. If the Magnificent ETF, previously I talked about that, right? So the Magnificent ETF, MAG, what's the ETF? I suddenly forget. Previously I talked about that. Yeah, MAGS. Sorry, yeah, suddenly forget about that. Okay, MAGS, the Magnificent ETF. Okay, so yes, thank you, Wee Kwong. Okay, so this is the Magnificent ETF over there. Okay, all right. So it's still weaker than the rest over there. This is the Mag 7. Okay, so this is that. Okay, small cap drop lesser, mid cap drop lesser, S&P overall drop the least for now compared to the rest. Okay, so bonds, okay, so far it is still positive. Emerging market, it is positive. International developed stocks like the Europe, okay, they are still outperforming the US counterparts. Okay, so this is just some visual chart for you to understand. Okay, all right. And so just to let you know, all right, we are still in the midst of this earnings season. So between 21st to 2nd May, 60% of the S&P company will report earnings, including 6 of the Mag 7 company. So just a very quick summary over there. Okay, from so far, okay, the earnings that has come out, okay, 75% of the company that's released their earnings, okay, have actually beat estimate, okay, with a positive surprise averaging about 10%. So it is better than anticipated, okay, and the average is about 7%, and they are now doing about 10%. Okay, but moving forward, okay, the current earning right now is not reflecting the tariff headwinds, because this earnings report is already prepared previously in the first quarter already. So this tariff things is only started in April. So the impact, whether it's going to have some impact, okay, we'll only know the second quarters. Okay, so that is only after June, then we will know whether it will have an impact on these companies or not. And some consumer companies are already warning of a weaker spending and pulling the full year guidance. All right. So despite that, okay, some of this financial sector, okay, despite a risk-off environment, the financial sector actually hit a new relatively high to the S&P 500. So it is doing pretty well. Okay, so this is the XLF. Okay, the financial sectors over there is stronger than the S&P 500 as well over there. Okay, so this is I've covered the macro side of things. Okay, so I will go through the technical aspect right now. Okay, right now, any questions so far? Okay, if you enjoy this sharing session for now until now, okay, please give me a like, share, and comments. Okay, if everything is good, okay, you enjoy this sharing session until now, okay, please type letter Y in the comments or type yes in the comments before I continue. And also I take a sip of water first. Okay. You see market recovering, the live stream people starting to go a little bit lesser today already. Okay. While I'm saying, okay, I'm smarter already. Yeah, smarter, but you know, just not the actionable lah. Okay, but at least you know what's happening now. Okay, okay, all the actionable things. Okay, it is the technical side of thing and also the seasonal kind of thing. Okay, all right. So before I continue, okay, all right. Anybody remember what I said last week on a certain number on the S&P 500 where there will be a reaction and also a resistance number area that I mentioned last week? Okay, anybody can remember? The number very easy to remember. One last week I mentioned already, S&P 500. Anybody can tell me the number before I flash the number? Anybody can remember or not? The key number I think could face some resistance level when the S&P cash index hit that number. All right, we'll say 5555, right? Okay, that was what I say. Okay, yeah, Henry, not 5550. Okay, it is 5555. 5555. Okay, you see 5555, 5555, 5555, 5. You see, today hit 5555. Okay, where is the high for today? The high today, it is actually 5554. About 5554. You see that hit there, starting to react over there already. So actually, okay, there is nothing magical about this number. Okay. All right, of course, some of the other traders, investors say that, oh, the market, it is at a region right now where there will be a area of resistance level. Okay, they tell you about 5,500 level, 5,000. Typically, a lot of people say the 5,500 level, that kind of thing. Okay, 5,500 level, which is the resistance level. But how could I pinpoint this 5555? Okay, again, nothing magical. It is because, okay, I am using the yearly CPR, the yearly central pivot range, and this 5555, it is actually the yearly pivot point, this black dotted line over there. So that's how I go. So in fact, I mentioned this to my SVI, Seasonal Vantage Insiders, reminded them today also. Okay, all right, I won't show you more because I will be sharing the so-called the trade ideas already. So you can see over there, okay, I mentioned this. Okay, the cash index, okay, is approaching the resistance level near the 5555 level. So what did I mention to my members? Anticipate possible, okay, resistance level, considered resistance consolidation level, okay, rather than an immediate breakout. Okay, but again, I mentioned that the market, it is still bullish, okay, even though near-term pullback are likely. So this is how I get the number. I reminded the SVI member again, okay, 5555. Hey, by the way, okay, members, I know there are people watching also. Even if you have no time to watch the video, okay, and such, at least, you know, read the summary, okay. All this will be sent to email. So whenever I send out this, is also so-called send out to email as well. So to remind you that I've already published the video. Okay. So once again, okay, this is the S&P. You can see that the market, it is actually coming down right now already. Okay. So once again, if you add in the usual indicator right now over there, okay, with the monthly and the yearly pivot, okay. So this is the monthly pivot, monthly CPR, okay. All right, monthly CPR. If I add in the yearly one, will be this black dotted. All right. So as of now, okay, for those who are new to MarketWise Asia or what, okay, market, it is still in an uptrend. Okay, we are right now back to above the central pivot range area, the yearly one. Okay, previously, yes, okay, it was in a downtrend, so-called, but after that, the market really does recover. Okay, all right, and of course, previously I mentioned really due to certain market breadth, market internal, like VIX and such. Okay, we might be at a potential bottom. So you can see that whenever the market it is above the yearly CPR, we are definitely in an uptrend. Right? So even like 2020, okay, when price is below the yearly CPR, we know that it is in a downtrend. Only after that, when price goes above the yearly CPR, we are back above the uptrend. Okay, and then you can see that price retest the yearly pivot again, okay, CPR level, and then hit higher again. So just to be objective, okay, we are not out of the woods yet, but we are not that bearish. Long-term wise, okay, we are still in an uptrend. We are still in uptrend. But again, my view is that, okay, this level might have some consolidation or pullback level. So don't ask me, okay, don't ask me how low can the market go. I don't know. I seriously don't know, okay. Market can do a few days of pullback, okay, all right, and then hit higher. Or maybe the market can have some consolidation, okay, and then hit higher. Or maybe the market can have some steeper pullback, or might even test the low over there, okay, might even test the low over there, okay, and then hit higher again. Okay, so also all these are the possible scenario. But I think the things that have kept constant, at least for the past 2 to 3 live stream, is that my personal view. This is my personal view. Okay, doesn't mean that it's going to be right. Okay, my personal view is that, okay, we have actually at the bottom over there. Okay, I don't think the market will go lower than this low over there. Okay, as of now. Okay, I don't think the market will go lower than, which means that market won't cash and S&P cash index most likely won't go below 4,008. This is my point of view. Okay, but within this area, okay, the market can do anything. Okay, can have some steeper pullback, some consolidation. So we have to see how the market move. Okay, so but I don't think within this 1 or 2 days the market will immediately go like that. Okay, possible, but I don't think so. Okay, there could be some stiff reaction right here. Okay, so the yearly pivot is normally a very heavyweight resistance level. Okay, and this is the bad news, okay, so far, because it is the resistance level. But the good news is, okay, okay, we are approaching the end of April already. So right now it's 28th of April. We are heading into the May soon. Oh, by the way, 1st of May, it is not a US holiday. The US doesn't celebrate Labor Day like in Singapore or some of the Asian countries. So 1st of May, it is still a trading day in the US market. So when there is a new month, what do we have? Okay, we have a new CPR, right? But of course, right now we won't know what is the CPR level, okay, correct or not? Because we are not at the end of the April yet, But okay, what is the developing central pivot range going to tell us? Okay, which means that, okay, based on the current price right now from the start of April until now, until the closing price of April, okay, the high-low close, what is the where is the current CPR right now? So if you actually take a look at the developing central pivot range over there, okay, developing central pivot range over there, okay, you can see that if the price doesn't change, the CPR for next month will be here, okay, which means that, okay, the next month, the CPR level will be here, okay. You can see that in the last month, the CPR level was here. So that is why the CPR is here, correct or not? So this is the thing here. So which means that, okay, next month, if nothing else changes, if the price stay put right now, next month CPR, it is like that. Which means that if next month CPR, okay, it is like that, okay, if price remains the same like that, which means that are we above or below the CPR level for next month? Let's assume that price, okay, didn't have a very huge correction and stay somewhat around the same. So I need to answer, is it above or below the developing central CPR right now? Above or below? A, if above, type A. If below, type B. I think the answer is very simple, okay? I just want some engagement with you guys. Okay, is it above or below? above, right? Okay, so which means that, okay, we should not be so bearish right now, okay, based on the purely price action perspective. Just looking at price, without considering other factors like the, for example, options flow, the market internals, market breadth, and such, okay, or sentiment and such, just based on purely price action, you shouldn't be also so bearish right now, okay? All right, of course, you know, if you really want the market to be in a so-called resumption of the uptrend, I think I said previously before already, okay, you wait for a 2 consecutive price above the CPR, okay, then you can safely say that the market is in a uptrend right now. But right now, okay, if market stay as it is, okay, we are still above the developing central pivot range, which means that we shouldn't be so bearish about the market right now. But of course, near-term wise, the market could still have some correction because, like I mentioned, this is the 5555 is the yearly pivot. Okay, all right, so I won't go through like the market breadth and such, which I think I mentioned already. So for those who are new, maybe you can watch my previous live stream and take a look now, okay? But you know, market breadth and market internals is also not so bearish right now, okay? All right, so let me back to this, okay? So yeah, so this is my views moving forward, okay? I think the market still has legs to go higher, so just need a little bit of time. So once again, I know that different people have different views. If you think that it is still a dead cat bounce, it is perfectly fine. If you think that it is still bearish, I think it is perfectly fine as well. And if you are listening to some guru, this one I need to vent out. In fact, I vent out to my SVI members also. So there are some gurus previously said that, okay, you need to short on rebound. I think when he first mentioned, it's somewhere around here. I need to short on rebound, that kind of thing, okay? So market did not actually go down a lot, okay? In fact, go up, okay? And after that, some of these gurus just keep quiet and never say much already, okay? So once again, I always tell my members previously as in early Feb or March, okay? I'm wrong means I'm wrong, okay? That kind of thing. I was expecting price to rebound higher, but it didn't. So it gets stopped by this means I'm wrong now. Wrong means I'm wrong, okay? And previously, I think there were also some gurus say that, oh, the bonds market will also crash, okay? And then the stock price will also crash some more also, okay? Once again, it is not my interest to name out all these gurus, okay? After that, quiet also. He didn't say that he was wrong, okay? So once again, you know, opens your eyes big. Those gurus who said those wrong things never admit, okay? The next crash onwards, you don't have to put weight on him now, okay? I have typically no respect to those who only shout when they were right, and when they were wrong, they just keep quiet all the way until they're right again. Then they keep shouting, okay? And they were right, okay? And those new people who were new to the market will think that, wow, this guru always like every time correct like never wrong because they only shout when they were right. When they were wrong, they just kept quiet. Do you agree with me or not? If you agree with me, just type A in the comments. Okay. All right. Sing Chong, okay. Any idea about gold? Okay, I'm not sure whether are you new to MarketWise Asia or not? If you are new, just let me know then. Okay. All right. Just let me know. Okay. So for the gold, okay, previously, okay, I was quite bearish. Okay. All right. So, but you take time, okay, to time the market. So previously I shorted around here. So for gold, okay, my view is that, okay, based on seasonal data, okay, there could be still more some downside to gold lah. Okay. All right. But you take time. Okay, you take time. Okay, doesn't mean that you go down straight. Okay. All right. So my view is that it could go down lower, but you know, how low it will go, I don't know. Okay. But I shorted somewhere right near at the top, okay? But I need to protect my profit. So let's say if the price, okay, all right, okay, so starting to go higher above about 3.38 level, okay? If price doesn't really go higher and start to go higher again, then which means that I could be wrong already. Okay, but my view is that more of the bearish side of things. Okay, but again, doesn't mean that I'm right. Okay, just to be a little bit careful over there. But you know, it might take some time for it to come down. But again, I could be wrong. I could be wrong. Okay, doesn't mean I'm right. When I'm wrong means I'm wrong. I need to get out and exit my trade. Okay, my view is bearish. Okay, but it takes some time to work out. And of course, based on seasonal data as well. Okay, and I think last week I also mentioned about the treasury bonds as well. So I said that, you know, towards the end of late April to until May, this is where the price started to hit higher. So for the SVI, I actually posted update on the bonds as well and the position that I have now. So okay, in fact I have a long position in the bonds market as well. Okay. All right. So ZZ is BTC Bitcoin bullish again near term. Okay. In fact, Bitcoin, okay, if you take a look at the yearly CPR, okay, it is above the yearly CPR. So Bitcoin is in fact bullish to me. In fact, I also mentioned that to my seasonal vantage group over there. I forget which one I mentioned. Let me try to search on BTC. Yeah. So I mentioned this on the 22nd of April over there. Okay. All right. In case you're not aware, BTC is above the yearly CPR. It is an uptrend still. Okay. So yeah. So again, just purely based on price action. Okay. Bitcoin itself, the crypto, it is bullish. Again, all right. Don't expect price to just go up straight like that. Okay. All right. There could be some correction and such. Okay. Coming down, okay, right now, because this was a very huge bubble there. So do expect there could be some correction. Henry, yes, TLT, yes, TLT, the one that I have is TLT, okay, or as a proxy, TLT is fine as well. Okay, so again, my view is that in the coming months, okay, Bitcoin, okay, could go higher, okay. Whether it will test a new high again, I don't know, okay, because I'm more of a short-term swing trade to position trade trader. Okay, so don't ask me whether in the future Bitcoin going to go and test 130k, 140k, 150k. I don't know. Okay, but short to midterm wise, I think there could be some upside for Bitcoin to go. But again, based on pure price action, okay, we are above the yearly CPR, which means that Bitcoin it is in uptrend. Okay, just on Bitcoin itself. Okay. And yeah, just also talk about that. Okay, I think previously, I think some of you guys also mentioned about this Zigwig breath, not breast. Okay, breath trust. Okay, all right. So this is the Carson group. Okay, just to let you know. So there was some so-called the market internals. Okay, or the market breath. Okay, there's this Zigwig breath trust over there. So basically, it is telling you that okay, this is a rare signal and such. Okay, after that there is this breath trust. Okay. Typically after this breath trust, okay, the market tends to go higher, okay, in 1 month, 3 months, 6 months, and 12 months. Okay, I'll post the link in the comments. So I can take a look and such. Okay, all right. So basically, it is sharing you how to use the so-called the number of advancing stocks divided by the total stocks. Okay, and they use a 10-day moving average. Okay, when it fell from a 40% level, dropped below 40% to suddenly above 61%, okay, in within a short period of time, within a 10-day period, okay, it triggered a signal. So basically, you wanted a market, okay, that has a very, so-called weak signal, as in weak advancing, okay, market internal, and suddenly within the next 10 days, it went higher a lot. So this is a breath trust signal. So once again, so this is, there is this so-called a signal. So as I mentioned, you can read more about that. So yeah, all this and that, okay. And typically when the S&P, okay, gain more than 1.5% for 3 consecutive days, again, after that, the 1 month, 3 month, 6 month return, okay, typically the market is typically positive lah. Okay, all right. So usually, I also look at the DP gallery, which I always talk to the people, you guys here, right? So this is the DP gallery chart. You can see that the sentiment, okay, it is actually still very so-called bad, okay. The AAII investor sentiment, okay, majority of the people, more than about 50+%, it is still bearish about the market, even though the market start to recover, okay. So all in all, given that the market internals, market breadth, price action and such, okay, I think that the market still might have some room to go higher, okay. But okay, it won't be a V-shape, right? It will take some time, okay. Okay, I think it is possible that the market could retest the high over there. You need some time, okay. But I don't think you'll retest the low for now. Okay, you won't. I don't think you'll retest the low for now. But it'll take some time. Again, don't quote me. Say Alex, it will go up immediately. I did not say that. Okay, there are a few scenarios that it can pan out. Okay, all right. And of course, certain things that I mentioned to my SVI members. Okay, I think previously. Okay, update, for example, okay, like this, I think previously, yeah, this one, okay. So previously, okay, I mentioned this to my members, okay, say that, hey, okay, I'm looking last week, this is last week, okay, 21st April, I don't mind showing you right now because this is already past, already over, okay. All right, so, right, I mentioned that I'm looking at the financial sector, XLF, IYF, or even you can look at the semicon sector ETF as well, okay. So if you take a look at the XLF, okay, when I first mentioned, okay, it was around here, okay. All right, so after that, price go higher. Right now it's up at a consolidation level. So right now there's still some profits to be made for me. Okay, I'll be watching this as well. Okay, so once again, you have to know how the seasonal data can help you. Okay, especially okay if the market is recovering right now. Previously, when the market is in a downtrend, okay, in a very event-driven volatility high mode, okay, we can ignore and discard the seasonal data. But when the market start to recover, going back to normal and such, we can look back into the seasonal data again. So once again, you want to know how the seasonal data can help you, okay, you feel free to go to this, the link over there, okay, unlock the secret patterns hidden in the market. This is an on-demand webinar. So once again, okay, this is the link. You can head over there. I'll post the link in the comments. Or you can go to the QR code here. All right, you can see that access the on-demand webinar and follow our social media channel over there. Okay. Or any questions so far? Just nice 1 hour mark. So this is my view of the market right now. So no change. I think I've been staying consistent for the past 1 or 2 weeks. Okay. 5555. Okay. Recap is the key resistance level right now. There could be some pullback for now. Okay. There could be some pullback, but yeah, overall, I'm still bullish in the market for now. Okay. But it take some time. Okay. All right. So, yep. So I don't see any question right now. So once again, okay, thank you so much for staying with me. If you enjoy my sharing session today, if you find value, okay, in today's session, I would really appreciate, okay, if you can give me a like, share, and comment, and type letter V in the comments, okay, to show me that you enjoy the sharing session today and you enjoy it. Okay, there's a value in today's session. Okay, all right. So with that, thank you so much for staying with me until the end of the live stream. Okay, so I will see you again next week. Okay, all right. So thank you so much for staying with me. Good night. Take care. 晚安. See you again next week. Okay, bye bye. All right, see you. Bye bye.